Hello traders! We are back with step number 8 of how to be a successful forex trader in 10 steps. In this video, we'll talk about the trading psychology. This is a very important part of the whole trading. We are going to show you what feelings are coming when you start to trade and some of the most common mistakes a trader can make. So, without further ado, let's begin. A person who wants to trade in the financial market must know how the big players or the market makers think and trade. Intelligent thinking and discipline are even more important than the trader's strategy and overall skills. It would be a lie to say that the success of the forex exchange market depends only on the system or strategy, as the reality is quite different. If you can control and balance your emotions, you will not make money in the market in the long run. Here is the set of emotions that can affect your trade. The first one is the doubt. The worst thing a trader can do is doubt himself. Doubt leads the trader to ask other traders, or worse, to blindly throw themselves into online forums and websites looking for answers that do not exist. Remember, your opinion is all that matters. Trust your own judgment. The solution. Knowledge and experience are a sure way to deal with this problem. Doubt can arise after several consecutive losing trades. It will make you feel like you don't have the qualities you need. Believe and know that you can do it. Get rid of the doubt. Every time you feel this way, take a deep breath and move away from the charts for a while. Come back only when you feel calm and confident. You can control doubt with experience. How you feel in your first trading month cannot be compared to how you feel in the third or the fourth month. Experience is above all. This is not a smooth journey. You will become a successful trader over time. The next one is the fear. It can be so easy to be afraid of the market, especially for novice traders who haven't yet made a trading plan or they are unsure of their trading strategy. In this case, you don't have to trade with a real account yet. It is important to note that even 80% profit accuracy, the percentage of losses can exceed 20% of 100 trades, but it's okay to keep going and going. The solution. You need to risk as much as you are willing to lose. If the loss will harm you or be unbearable, reduce the risk. Fear paralyzes the nervous system, therefore severely restricts your trading, as you will miss good market opportunity You will be stuck in the illusion of fear and anxiety about losses. Fear is a natural feeling. When a loss occurs, no matter how rich you are, no one is happy to lose money. You need to reaffirm that you are in this field to make a profit, and that this is just like any other business, where the losses you occur are your costs. Most businesses are not so profitable. You are lucky to be a forex trader. You have the opportunity to become profitable in just a few months. Success cannot be forced. Do not rush it. Take your time, and in the end, your fear will be something extremely important from your past. Staying balanced is vital in your battle against fear. Sitting in front of your screen after a loss will be devastating. You have to learn to put your emotions in the background. The real trader will go away to gather his thoughts and will trade when he is ready again. You don't need to be in the market every day. The next one is the revenge. An emotion that has existed since the Stone Age. After losing trades, you will feel vindictive. This is a human nature. To ban this feeling, you need to understand that there is no such thing as 100% safe in trading. Any risk can turn into a loss at any time. It's not your fault, and you should not take it personally. Such scenarios could even be triggered by natural disasters in any country in the world. That is why it is said that a wise merchant will never put all his eggs in one basket. The worst decision you can make after a loss is to go straight to another trade. The result can be even bigger loss. Revenge in trading can be critical to your emotions and therefore at your account. Stay mature for your losses and stick to your long-term goals. Revenge provokes anger. This can often lead to negative consequences such as hasty and bad decisions. But you must remember that the financial markets are not interested in your emotions. Actions based on revenge will soon leave you without an account. If you get angry at your screen, your phone, or yourself, you will not take advantage of winning deals anyway. 90% of traders lose daily, so you're not the only one the market wants to upset. Only with constant effort and hard work you will earn in the long run. The next feeling is the greed. Greed is probably the most dangerous emotion. When you have a series of successful trades, you will most likely feel on the top of the world, and this can lead to greed. This can also occur when the trader doesn't have a structured plan or specific realistic goals. Trading aimlessly is like driving without a destination. It will make you spin in a circle and drain your fuel tank. Be humble and disciplined. Another important mistake is to add more positions when you see that the price is moving in your direction or even against you. So you increase the initial risk without being tactfully considered. Greed can make the best trader fall to his knees. Another mistake is that it doesn't take into account to keep the risk in proportion to your initial investment. The increase in trading volume itself must be within the strict guidelines of your trading plan. Just because your account is growing doesn't mean you need to increase your trading volume right away. Greed is controlled by staying grounded and building the right business goals. Once you know what your goal is and have achieved it, you will not be tempted to risk blindly and ruin your plan. Once you achieve the goal, rest. Get away from the market. Go out with your friends or family and have fun. The avalanche effects of greed can occur when traders feel overconfident or euphoric. If you apply a good risk-return ratio and trade discipline, you will eventually become profitable in the long run. Building the mindset of a professional trader is one half of the battle, while the other half is to maintain it. You have to understand how the market works and that not every day is a trading day. Choose your trades carefully, being proud of your analysis and reaffirming the facts of forex trading. Sometimes the battle with your own mind is the most difficult, but once you overcome this obstacle, you will open yourself to long-term success. Keep your mind clear and calm. Really focus on not standing in front of the screen for too long, because it is possible that your mind will invent business opportunities that do not really exist. No matter what time you are trading, it is enough to look at the chart only when the candle of the particular frame has closed. Guys, if you haven't seen the beginning of this series, you can watch it from the link in the top right corner. Master your personal trading strategy. Each trader has unique characteristics, therefore strategies and those of other traders may not always suit you. Some may be patient and are best suited for long-term trading, while impatient people fall into the category of intraday traders. Whatever you prefer, trade, practice, and refine it. Accept it as a personal and professional development, as you would with any other skill needed for any other businesses. You should enter in trades only if they don't conflict with your preferred methodologies and trading plan. Sometimes it's necessary to have the mind and emotions of the robot, in the sense of knowing by using your trading without unnecessary questions and doubts about it. We repeat, you have to put your emotions aside. Now let's see some of the common mistakes and traps that 99% of traders have problems with at some point. There is the fine line between losing money because of your trade and losing money because you fall into stupid traps. Losing trades. Losing trades is part of the reality of being a trader, whether you work from your bedroom or on Wall Street. Find out the facts about trade. Even a person with 80% success can lose 20 consecutive trades out of 100. Be disciplined and stick to your plan. Loss of money. Unfortunately, 90% of traders who lose money lose their all confidence and self-doubt. Do not be deceived by the illusion of despair. Your will and inspiration are all you need. Proper risk management. Risk management is vital to achieving security and long-term success. Risk management involves safely controlling the risk per trade at a level that is tolerable for you, so you can swallow the loss without fear. And yet, traders make this mistake over and over again. The mistake of risking too much money is a sure way to experience a margin call. The next one is the rush. When a trader feels like he is missing out on an opportunity, he will often skip the step that allows him to judge whether the trade makes sense and makes a reasonable profit. As well as a mistake of assessment, the circulation of the volume according to the plan can be neglected. Thus, it's foolish to enter in a market with too much risk for a trade that doesn't even make sense. Imagine entering into a trade for 100 pips of profit and your stop is 200. Yes, that's nonsense, known as chasing money, not pips. Not trader, gambler. A trader who approaches the market like a gambler, one who is biased and irrational in his decision, will think of money, not pips. This mentality will never succeed to turn you into a professional forex trader. Forex trading is a business, not casino. No trading plan. Trying to trade without a proper plan is probably the most common mistake forex traders make. Many of them say that they will create a plan later, after they start earning, or they just don't need one until their luck is over and their accounts start to melt. Follow your trading plan and trading strategy. This will help you to keep your emotions and trading separate when needed. Every trader, especially a beginner, needs a trading plan to solidify his strategy. It is impossible to have a plan in your head. You have to physically describe it and follow it every day when trading. This will keep you profitable. At the same time, you will create a portfolio of your trades that you can review and evaluate what you are doing well and what you can improve so you can constantly be in progress. Switching from demo to real account. We understand your desire to start trading real money after successfully trading in demo account. However, the truth is that until you master a trading strategy, you should not be close to a real account. Mastering the strategy and yourself. We mean that you must be consistently successful in demo account for a period of at least 6 months. Don't treat the demo account like a sport. Real account trading is not much different from demo account trading. It comes down to the emotions involved in a real account while trading your hard-earned money. Therefore, you should switch to real accounts only after you have succeeded in a demo account for a significant period of time. Take your time. Don't bet your money, but invest them. If betting is your motive, then you have better chances of winning at the casino. Traders who are successful in the long run have a trading plan, a trading journal, and know exactly what and when to trade it. The market will always be here, even after 100 years. Overconfidence. Traders who have consecutive profitable trades will begin to feel invincible and have conquered the market. Despite the number of trades you have may won, you need to remain modest and disciplined. Control your excitement and stick to your trading plan. Traders often increase their volume because they feel invincible. You can do this once you have significantly more capital to trade. And here are 5 quotes that we suggest you quote over and over again to maintain a positive mental attitude in your trading. Every day is not a trading day. Focus on pips, not money. Invest, don't bet. Trade smart, not often. Whoever says he can is right. Whoever says he can't is often right. Okay guys, this is what you should expect and what you have to master to avoid the mistakes and the traps in the forex trading. It's not simple, as you see, but as soon as you learn it, you will become a calm trader and you will be more profitable. If you like this video, hit the like button, share this video with your friends and subscribe to our channel. This way you are helping us to improve the quality of the videos we make. Also, you can watch our weekly forecast from the link in the bottom right corner. That's all for now. We'll see you next week. Bye bye.